Welcome back, and we are discussing all about options with our panel here. Well, remember, starting right from the Parliamentary Standing Committee to Kabra Committee to Abhijit Sen Committee and also the Government of India Food and Public Distribution all have advocated on how options are important for the Indian commodity markets, especially to cater to the needs of all the stakeholders, small to big. So, Shivanshu, coming to you from there on, when you talk about a small stakeholder here, what is the kind of cost that we are looking to incur to start with when you want to trade, let's say, perhaps one lot of options here?
Sure. So if you look at a gold, current prevailing prices, let's say it's a 30 lakh futures contract. So typically the call would be, the premium would be, let's say about 1%. So let's say 300 rupees. So you're looking at, a two-way cost, which is practically what, 40 to 50 rupees. You see, so which is why I said that it'll get that intraday smaller, participant back into the market enthusiastically with gold and silver.
Gautam, just coming to you, and since you say you hedge into the international markets anyway, so with the kind of product that you have in front of you in sense of gold options, what have been your comparisons and learnings here?
So certainly, I think the big plus is the margin. As a buyer of an option, since we don't have to put up the margin and you're just paying the premium, so your downside is protected. And this philosophy also would, filter down to the retail traders or investors who traditionally may not, maybe hesitant to trade with a stop loss, but buying an option is a stop loss in a way where their downside is protected and they can participate in the upside. So maybe a company like us, who may have to post margin or have to monitor mark-to-market daily, the options could shift us away from that.
Yeah, and very well work into the scheme of things that you are into, of course. But Sanjeev, also, the kind of volatility, as Ashish was mentioning earlier, has really gone up, and on both sides, really. In this last 1 month itself, we've seen some $70 of a move coming in for gold. How important is it really? How important would you advocate is, in sense of hedging, really?
Well, definitely, it is the thing to look at in terms of on your inventory to control your price risk, because the whole process of gold price movement, volatility, and the potential loss of future profit because you've taken a futures contract fixed price transaction, that gets eliminated, or that value add is created by the options contract. The other important thing is that from a customer's perspective is when you say the prices have gone up so steeply, the question with the customer
and they've
is...
come down equally.
No, will it come down equally? And hence, what will happen to the purchase that they made a month back? And there, at a nominal cost, the customer can be given a option structure by the retailer to encourage her to buy even when the prices are high, and giving a best of both the worlds, price today or price 1 month or 2 months down the line. So it's a win-win for both.
It is.
Also, as the options market evolves, and if financial institutions and others are allowed to operate in this market, internationally the depth of the options market is 30 times the physical market.
Sure.
So in an Indian context, you're talking about 90 lakh crores worth of contracts and transactions at a once it matures, which also means that you're creating a India price, a very dynamic and transparent India price without any pulls and pulls by interested party. So that's another interesting thing that can evolve as the volumes go up.
Shivanshu, just coming back to you on that. Now we have like 4 things to trade in gold immediately. Apart from what, of course, government has been introducing in sense of their gold schemes, you have a spot, you have a forward. Futures and options is something that MCX is doing right now. There also has been a conversation on how perhaps options could take away some participation or some volumes away from futures. Do you see that as a threat, or do you think both can pretty much coexist now?
So, Manisha, I think in a sense it would augment the volumes from what the sense we get from the markets, because from a retail point of view, typically it's like if you go long futures, you buy a put option for insurance. Having said that, there's a gazillion structured products which are formed around these futures and options combinations. Having said that, the parity, typically a bullion dealer would take into account a few things before making a decision about the MCX futures itself, which is the prevailing parity difference between, let's say, the MCX near month contract and the spot prices in the Indian market, and also the import parity, the landed import prices. So this three-legged decision would anyway create sufficient room for anyone to participate in the futures and decide about giving or taking delivery towards the tender period. Having said that, options is going to add another market segment which is actually weaned away from the bullion contracts, which will come back via this route. So I feel instead of cannibalization, this can actually augment the volumes going forward.
Ashish, just getting you back into that conversation, what is your sense really when it comes to the participation? I mean, you for one clearly have committed on how you would be hedging much of your gold exposure onto this one. Right. But do you see a lot of smaller jewelers, actually getting into it? Because as we were mentioning earlier, there's a Kucha Mahajani, there's a Zaveri Bazaar, there is that jewelers market in every city. Yes. Do you see many of them coming online?
Yes, they'll be positively interested. But if currently the contract size is 1 kilo, then absolutely the smaller ones may not be able to participate. But one more point I think I missed saying, because there is no margin, no mark-to-market pressures, the whole hedging process becomes that much more cheaper and economically viable for the even medium-sized retailers. So I'm sure people will get into this product.
Shivanshu, do you want to address that? As he said, 1 kg perhaps could be a slightly bigger contract for the very small stakeholders. Have you taken that into account?
Yeah, so if you look at the current participation in the gold futures contract, it probably has one of the highest in terms of retail participants, also in terms of the members participating. So as such, it has taken root into the small and big jewelers across the country. But I feel that the low transaction cost of options itself would pull those small to medium enterprises back into this system. Yeah.
Options also is for investors, for people who actually do not deal in this underlying commodity to start with. How much of an interest do you see coming in from that sector?
Sure. So the retail participation within the gold futures, if that is something to go by, that's also one of the highest. And our national brokers who have high retail presence have indicated that a lot of pre-existing interest is there in this market. So if you compare it premium-wise also, some of the popular, index options on the equity side compare similar with this.
Oh yes, a lot of people do not want to trade futures, but they might be more open when it comes to trading into options because of the kind of instrument that it is to start with.
Right. And also when the volatility, the implied volatility changes from high to low and vice versa, that gives opportunities to buy or sell options. And the fraternities being common, some of our members who are active on the writing side as well have given a thumbs up considering this fact. So we look forward to a positive start there.
Also, you're launching around Diwali, Shivanshu. Are you looking to capitalize onto that? Do you think more people, because the fact that they get into gold buying at that time is yet another reason to come at, during that specific period?
Well, absolutely. I mean, I think bullion and the festive season in India go hand in hand. They always have. And in terms of readiness, everything is ready. So we look forward to a launch somewhere there before Diwali.
So that's, of course, all the positives that we have planned out for you or listed out for you when it comes to gold options. Shivanshu, thank you so much for joining us and telling us. Of course, the launch, as Shivanshu said, is by mid-October. That is what you have to watch out for. One of the initial products in sense of options which SEBI has come out with, the promise of many more there. Gentlemen, thank you. Ashish, Gautam and Sanjeev, thank you so much for joining us and explaining to us and, of course, giving encouragement to that new product.